This debate is proudly brought to you by the Department of Economic Development, KwaZulu Natal.
Very good morning. We're coming to you live from the International Investment and Entrepreneur Conference in Durban. And our panel today is going to be discussing whether Africa is ready for an economic reawakening. Joining me on the panel to discuss this topic further, Andile Mazwai, the CEO of BJM. We're joined also by Matthew Lester, Rhodes University, the MEC for Economic Development and Tourism, Mr. Michael Mabuyakhulu, and we've got Colin Coleman from Goldman Sachs. Gentlemen, thank you very much for your time this morning. The Premier, the Honourable Premier of KwaZulu Natal earlier today, Dr. Zweli Mkhize, highlighted the fact that we need to ascertain whether we are really ready for foreign direct investment on the African continent. Earlier, Colin, you highlighted the fact that Walmart, Massmart had just been given the green light, and I think that's possibly an appropriate place to start. Your thoughts in terms of what this says for foreign direct investment going forward, the fact that the Competition Tribunal has given this transaction the go-ahead?
Well, it should provide a lot of comfort to the investing community that, notwithstanding a lot of airing of concerns that emerged in the course of a public process, that the Competition Tribunal has ruled in what appears to be a very fair and judicious manner, and that has happened without necessarily any political influence being brought to bear. And so on the merits of the case and the facts of the case, the Competition Tribunal has come out with conditions which Massmart has effectively offered and accepted.
MEC, if we see this as a test case for foreign direct investment into Africa and particularly South Africa, do you think that it's really now that we're going to see much more foreign direct investment coming to the table because of the positive nature of what has transpired?
Well, we think we must be realistic and accept that it is a positive decision for the country and for the region in particular and for the continent. However, what we are actually arguing from the point of view where we are is that there is still a lot that we need to do. We still to see quite a lot of investment in infrastructure so that we can ensure that you reduce the cost of doing business and reduce the risks that many people who are investors would actually get to be worried about. When you look at the nature of infrastructure that we have in many countries in the African continent, and from where we stand as South Africa in particular, it's the reason why we are talking about that we are going to be investing around 800 billion rand in the next 3 to 4 years and going about 1 trillion in the next 10 years. Because for us it is important that we must open up and ensure that we have got the pull and push factors of investors into our region. But there's a second thing that we think is also quite important. We think there is quite a lot of opportunity for growth in the continent. And therefore, one of the things we have decided to do over and above this test case is that in KwaZulu Natal we have come up with a new investment protocol, which in a very succinct manner captures what any investor would want to know. And we think we're going to be about amongst the top 10 countries in the world that have done that, because it simplifies the processes. It makes any investor to know that if you want to come and invest in South Africa, in a booklet, what are the things that you actually ought to know, from zoning to EIA, environmental impact assessments, and to many other regulatory issues, and also putting timelines of when certain things should be done. What we do, therefore, we want to actually make it easier for people to come to this destination, invest here, have a process of hand-holding of investors until their investment comes to fruition.
Andile, still on this point, do you believe it is easy to invest on the African continent?
The short answer is yes, it is easy. If you look at other geographies like Asia, if you look at even South America, if you want to understand what difficult is, you have to go to those geographies. Then you get an appreciation of what difficult is. It's perhaps somewhat tricky in that it can be unconventional. If you're accessing through capital markets, then the answer is pretty straightforward. Coming through South Africa or even a Nigerian stock exchange, which is itself undergoing something of a renaissance, then the answer is yes. Getting feet on the ground, for those who have the will and the determination, then the answer is certainly yes, it can be done.
Matthew, it's more about just bringing that money into the stock exchanges. As Andile points out, it's about keeping it on the ground. Are we good at doing that?
I think we're fine once we get it here. I think we've got to go and fetch it, though. I think the rest of the world at the moment has got its own problems. We got off very lightly out of the global credit crunch. We were only officially in recession for 9 months. And now we come out of it and think everything's okay, where the rest of the world is still hemorrhaging and got their own problems. We've got to get out there, we've got to sell ourselves better. And then we've also got to take things like the Walmart deal and say, right, here was a matter. It went through a proper process. Number one, we've shown that there was a proper process. Number two, very importantly now, the legitimate grievances that were put there must now be monitored and answered. Was the Competitions Board right? In 2 years' time, we've got to say, is that right? This is what you can achieve by coming to Africa, and all of those promises have been met. And that's an important part in it as well, that we're all emerging together. There's huge opportunity. But it's not a question of just sitting here and waiting for it to arrive. We've got to go out there and fetch it.
MEC, let's bring this back to you. We are rich when it comes to natural resources. The Premier made the point earlier that those natural resources pass through the continent without offering any value. Where do we start in ensuring that value is derived from our rich natural resources?
Well, I think this is one of the very important debates that has been raging, and depending where you stand, and people have actually having their ideas, we are very clear as government. When you look at the question of the new growth path, one of the critical emphases that we're making is around the issue of beneficiation and adding value. And for us, it is important because it's going to require people with the technology, with the necessary capital inflows to come and invest. And it is going to also ensure that people open up and see opportunities. And there is no doubt that for us, the issue around the question of value addition, and us therefore prioritizing that as one of the areas in terms of marketing ourselves and positioning ourselves to the world, and therefore forging for partnerships, because the fact that Africa has the resources and the truth of the matter, the technology to beneficiate and add value is not actually in our continent. We now need to begin to be able to bring those who have that ability and that expertise to come into our continent. And our work is to go out there as South Africans, as Africans, as the SADC, all of us together, not only the state, but also everybody, including the private sector.
Andile, how do we rise above the perceptions of corruption, unfair licensing in this arena, our sweet spot, the natural resources?
It can only be done through demonstration. And unfortunately, there's always cause for somebody to make a report which demonstrates that process wasn't followed, that there were irregularities. For as long as those continue to happen, even if they're in the minority, the perception is created. And so many people will then be shunned away simply from the perception. You need a very clear and strong political will that comes out definitively to say, this will not be tolerated, and make examples of cases where it is found to be that way. There really isn't any other way of doing it.
Colin, when you network with international peers, what is the perception of the continent, specifically when it comes to natural resources? Is there a prevalence of that issue of corruption, unfair mining licenses being put on the table?
Well, as I say, I think you've got to just deconstruct what Africa is. I mean, a place like DRC, which is a very weak state, but extremely rich natural resources and a colonial legacy that is mind-boggling when you look into history. You know, the reality is that the DRC massively needs the investment, but really doesn't have the technical means with which to engage, and therefore issues like how much taxation is coming through actual production of mining revenue is quite worrying when you actually dig into it. So whether the DRC is getting the benefit of attracting the investment in extracting those resources is a question which needs to, you know, be engaged with and understood. A place like South Africa is a very different place because it's seen as an extremely much in a leading economy in terms of a total capability and also an endowment. If you look at the platinum resources, for example, 80% of the world's platinum basically in one province. You have an incredible legacy of diamond production, gold production, and so on and so forth. The problem, though, when people look at South Africa from an international investment point of view, is we have certain structural issues which we just need to take a reality check on. One, deep-level mining. Two, a lot of safety issues associated with that. Three, AIDS in the workplace. And there's a lot of environmental issues which the global giants in the mining sector are very concerned about. So in combination, that is a lot to deal with, notwithstanding any regulatory issues, mining royalties, rights, empowerment issues, threats of nationalization, and so on that might be taking place. So we have to be quite careful and quite measured about, against the benefits and the positive respects of South Africa's mining endowment, what we expect and what we impose on investors, including the issue of beneficiation, which the MEC has mentioned. We don't want to over-determine and over-complicate investors' decisions. We do want to, unlike the DRC, as I've mentioned, we do want to ensure that the benefits of the revenue actually do reach into the South African economy and do benefit South Africa as a whole. Generally, I would say it's probably true to say that South Africa itself has many obstacles in place to riding the resource boom. The rest of Africa is far more fertile, as seen by the international community, the Chinese, the Indians, and so on, for extracting resources in a more simple way for their use in the economy.
I think you bring us to a very valuable point. You mentioned the Chinese, and of course that has dominated headlines for some time. China scrambles for Africa's resources. Do we embrace them? On the theme that it is costly to get these natural resources out of the ground, and we don't necessarily have those coffers available to us on the continent.
Well, we have to. We've got to go back to what this conference is about. This conference is about those that don't have and how we are going to help that along. And if China wants to come along here, that's fine. And they can come and get our stuff, but they've got to be in a partnership basis. It can't just turn into a grab for Africa all over again 100 years later. And what we've got to look at this, and all what we're doing is, right, let's go about this in an orderly manner. And that's when we're coming off the base that we've come off over the last 20 years. There's a lot to be done to settle that down as to what is the right way of developing this where all of us can be winners.
MEC,
it's not going to be a process that's going to happen overnight.
This is a subject very close to your heart. I know you've got some thoughts in terms of how we develop that partnership with foreign investors, such as the Chinese.
Well, I think first and foremost, as a matter of principle, we will welcome any nation and any country anywhere in the world that wants to partner with us in Africa to be able to ensure that we can develop and exploit the resources that we have for the benefit of all of us as Africans. However, I think the danger that we must guard against are the terms of engagement. Those terms must clearly enunciate the fact that we also must become partners rather than becoming spectators. We must ensure that the number of workforce and people who are brought from outside are those who bring in specialist skills that will help us to be able to extract and exploit those resources for the benefit of us. We must ensure that the issues around local content and sourcing are looked at. What actually worries us at some point is that the terms of the deals, I'm not necessarily directing this to China, but the terms of the deal for some of the deals that are done and transactions that are taking place are a worry when you see a country coming in and bringing in its own workforce, bringing in its own material, employing nobody locally, and not having any multiplier effect in the economy. And those terms for us will be a worry. But we think, therefore, Africans, in particular, must not become spectators in their own continent. They must become full participants in their own development.
Andile, when you ask the question, is Africa ready for an economic reawakening? You've got to look at one of the big challenges to that being the energy crisis, particularly the energy crisis that was highlighted in South Africa in 2008 with electricity shortages. We have been cautioned by Eskom that we need to be conservative of electricity going forward through this winter period. Is it a key concern for you? It's certainly hit international headlines.
South Africa is not unique in that position, but is it a concern? Yes. Take a longer-term view and answer the question, what infrastructural spend and development has there been since this administration took over in 1994? And the answer is, for the first 10 years, almost nothing, simply because it was getting the accounts of the country in a position such that that spend could take place. The demonstration of what happened last year with the World Cup is that, A, it can be delivered, B, the resources are there, and the most important one, once the infrastructure is in place, then the private sector can come in, and so you get a stimulation of the economy. So the answer is yes. As long as the will is there to continue to spend, then certainly the problem will be sorted out.
And the headline today, we had the Public Enterprises Minister yesterday, Malusi Gigaba, saying that there's a R1.5 trillion backlog in terms of infrastructure spend. We need to look very carefully at public-private partnerships to ensure that we rectify the situation. Isn't that a scary thought? 1.5 trillion rand backlog.
It's a very positive basis for being cited that there is development to come. And capital investment is a very, very important part of what is going to drive both in the public and private sectors the economy going forward. So the fact that we have a built-up requirement for electricity generation, for improved transport, improved rail, improved port networks, and we have good managers in place who are capable of delivering that. I think it's leaving those managers to make the decisions that they need to, which is going to be a big challenge for the government, because I think there is an overarching framework where those managers, if they feel that they should be involving the private sector in delivering an improved port network or rail network or transport system, they should have the freedom to do that. I think the ideological framework around privatization versus nationalization is not helpful to actually getting the delivery of that infrastructure in place.
Matthew, let's bring another topic to the table here, and that obviously the one of job creation across the African continent. And if we start at home, we know that unemployment in South Africa currently is just above 25%. Does that make us ready for the economic awakening?
If you look at, and it's a major thing that you've got to take into consideration, because the number one priority, if you watch the presidential speech in February this year, is we've got to do something about this lost generation between 18 and 30. You've got 25% of the population who's either unemployed, that's 4 million people who've looked for work in the last 30 days and haven't found it, or a further 10-odd million people who are not economically active. They're not even looking for work. So you've got a situation with 30% of the population unsupported, sitting there doing nothing. And today we're in the capital of that. KwaZulu Natal has got the biggest challenge going forward on that. What you've got to take from that is you've got to say, that is the central priority of government going forward. Yes, there is all of the stuff that's got to go into infrastructure and everything else. But government's going to need some help because they cannot get to everybody and service all of this off the existing tax base. Not unless they're going to put a whole lot more tax in here or borrow a whole lot of money or do a whole lot of other things that we don't want them to do. And this is why we've got to start developing more public-private initiatives. It's got to come.
MEC, national government putting the target on the table. They want to create 5 million jobs over the next 10 years. Is that realistic in your view?
Well, if you look at the reasons why we have taken that approach, and that we have not just taken that decision in the vacuum, the fact of the matter that we have actually said, what is the growth trajectory of South Africa? And hence, therefore, we've come up with a growth path, a new growth path. And for us, we think that the new growth path begins to actually identify in which sectors of the economy can we create those jobs. And secondly, that in doing so, what are the supporting measures, the instruments that can give effect to this? The 9 billion rand that was announced by the President in February earlier this year is a clear commitment on the side of government that only we're not talking about job creation, but we now want to put resources in ensuring that we therefore drive private sector and entrepreneurs to be able to go into these sectors to do the necessary things so they can create jobs. It is not the state that will do so. The second part, we are seeing a government that is also committed in saying, we don't want to become a consumption economy, we want to continue to become a manufacturing economy. And hence, therefore, the 10 billion rand with the ITC to try and revitalize manufacturing. Again, the intention here is to simply say, let's sharpen the skills and the competitiveness of South Africa and maintain our global competitiveness with regard to manufacturing so that we can then be able to say that those who want to expand the existing factories and who need the resources, they can then be able to utilize the 10 billion rand manufacturing revitalization fund. So in a nutshell, we are seeing a state that is committed in job creation, not only as a statement of intent, but that is putting resources, but that is putting a strategy to back it. And we think it is not dependent on the state, it is dependent on us as partners in the economy, as social partners working together. There is space for private sector, and the private sector should seize the space.
Let's bring in a private sector voice on employment in this country and what your thoughts are. Is it going beyond a statement of intent, as the MEC alludes to, from government?
I think it definitely has to go beyond that. If you look at the new growth path, creating 5 million jobs in 10 years is actually unambitious. The economy is creating 500,000 jobs a year anyway. So if we do nothing, we're going to get to that 5 million. I'm not saying it to be dogmatic or cynical. I'm saying it from the perspective that it is unnatural for people to be unemployed. We live in a country where we think that that is the default position and that we have to somehow create jobs for people. What we have to do is to create opportunities by removing the impediments. And the largest of the impediments is that people do not have access to physical capital and they do not have access to human capital. Our education system continues to fail the vast percentage of the population. And when people do get into the workplace and they're looking for access to physical capital, again, they're finding barriers. Government already has the answers to many of these questions, like the CETAs, for example. The ideological question has been answered, and it really can't be faulted. It's in its implementation, and I think that that is where government really needs to focus on, delivering on the promises that it's already made and the structures that it's created already.
MEC, let's bring this back to you. Is it a priority within government circles to strategize on education, not only in South Africa, but on the African continent?
I think anyone who has followed that one of the most important things, to talk about the 5 top priorities of government, one of those is education. Other than health, safety, job creation, and rural land development.
Perhaps I need to rephrase the question. Is it going beyond a strategy? Is there enough execution on education? Do you believe so?
I think if you take what we have been actually committing ourselves, let me start by saying, we decided it was important, for instance, to actually focus on basic education and make that a critical pillar and focus on and have the whole focus of a ministry and a minister who then simply says, in that area, we want to ensure that we go as far as we can in ensuring that we give South Africans, particularly young South Africans, the basic skills, requisite skills, so that they can become competitive in the economy. Otherwise, if you don't do that, you cannot grow, you will stagnate. But the second thing was to actually focus on saying, beyond what we are doing and the investment we are putting, what the issue now is the quality and improvement of the quality. In terms of investing in education, as I think you have heard from Mr. Coleman, it's true that South Africa is far ahead of many countries in the world. The issue now is to ensure that at the quality level of delivery of education, we improve that quality. And hence our focus now has turned into that area now, in the improvement of the quality of education that we render and we give to our people.
Matthew, you want to add at this point?
I think there's something you've got to add into this, and that is we've got our problems with education and job creation, etc., but we've got another huge negative influence which is being dumped on us by the rest of the world. And that is, if you're going to let the US deficit go to the extent it's going, and you're going to weaken the dollar and strengthen the currencies of emerging markets, they are going to be uncompetitive. We've got this huge drawback on Africa at the moment, and all emerging markets, with strong emerging markets versus a fictitiously weak dollar. Obama's got to stop it. But I don't know how we'll ever get him to listen to us on that one.
Well, the reality is we're not going to be able to stop Obama and influence US policy decision. What should we be doing at home? Because again, this is another debate that has been raging. Is the strong rand a negative for this economy? We're sitting at 6.79 this morning on dollar rand. Colin, interested in your thoughts on this front.
Well, the Goldman Sachs forecast in the context of a weakening dollar is for the rand to go to 6.50 in 12 months. So just to give you the facts. But I would say, you know, the inflation targeting regime of the Reserve Bank is exactly the right policy framework with which to attack this. Because the reality is if we maintain within the 3 to 6% inflation targeting band, the rest will take care of itself over time. And so the question is, how competitive is the South African economy? And it comes back to things like, do we put in place impediments in the mining sector for investment? Do we get the investment we've been talking about in the education and health sector to, on the output side, reflect the leading investment? At the moment, we have lagging indicators on output, and we have leading indicators on investment. It should be the reverse. So we need to make the people of South Africa competitive. We need to make the policy environment conducive to investment. We need to increase the amount of foreign investment permanently that is investing into the South African continent, and we need to facilitate, which I think the government is trying to do through exchange control, relaxation, and so on, South African companies' investment in the African continent, because the superior returns and superior growth that is being achieved in places like Nigeria Angola, other countries, is going to benefit the South African people. And we've got to be much more aggressive about creating the environment for this linkage to take place.
Staying with this local currency, if we do artificially move to dramatically weaken the rand, which appears to be a very difficult task at hand because whatever is done to this point hasn't actually had any effect, and billions have been spent in the process. But if we do that, for instance, we institute a Tobin tax, as they did in Brazil, isn't that investor unfriendly, to use that terminology? Andile.
Interference is unfriendly. And we probably could take more lessons from our friends up north on weakening our currency. That's a joke.
Widespread laughter from the audience, Andile.
If you move the currency left, you get one group of people happy. If you move the currency right, you get another group of people happy. I think the single most important thing which the central bank appreciates is that what really is the frustration of all concerned is the volatility in the currency. If you read the newspaper next month, you could find that the rand dollar has moved 50 cents. That headline could easily read. And as we sit here, we'd ask, which way has it gone? Has it gone left to 6 or has it gone right to 7? The central bank, if you could find a mechanism to reduce the volatility, such that predictability is easier in the currency markets, then it takes away all of these issues. The rand is not a panacea. You can't solve for rand, and everything else then takes place. To pick up on a point that Colin has made, the infrastructural impediments are the real issues. If you are an importer-exporter and you want to get your goods out of our ports, it takes you 30 days. Our trading partners do it in less than a third of the time. It's got nothing to do with our currency. It's got everything to do with our efficiencies. Those are the things that are going to make a difference, rather than just simply finding a number for the rand-dollar exchange rate.
I remember recently the South African Reserve Bank Governor, Jill Marcus, saying, we understand the pressures associated with the rand, but if all the market commentators, if all the academics out there could actually present a solution that would alleviate the pressure and eliminate the volatility, then please come to the table. Well, Matthew, have you offered some solutions?
The last person who tried to control the rand was Chris Stelz, and it had as much effect as throwing a muffin at a black hole. Absolutely nothing. And they can't do that. What the Mboweni era showed us is we've got to sit tight and rock and roll with the markets and see what happens. The only thing that I would like to see is a bit more political noise being made about it overseas. You know, this is one of the reasons why, for example, the manual thing on the IMF, another debate, it would just be nice to have that voice out there and say, what are you doing?
It brings us perfectly to the theme that we're going to pick up with after the break, and that is Brazil, Russia, India, China, South Africa, the BRICS, of which we are now a member.